Making money in the energy sector is a given, but did you know there are some non-energy stocks as good as or better? Holy banana bread, let's do this! Many of us have been doing very well with our energy stocks over 2022, and often they were the only hints of green in our portfolios. However, there have been quite a few non-energy sector stocks that have also been crushing it in 2022. In fact, some of them have been outperforming oil and gas, and that means, well, yeah, that means we should take a look at them. Before we oogle, let me know in the comments what your best performer of 2022 has been thus far. Also, I am very grateful to see you all here in the home of free financial content on YouTube. Be sure to subscribe right now so you won't miss a single moment, and a huge thank you for that click. For today's list, I have found 7 of the biggest movers based on growth alone so far in 2022. These are stocks that have done exceptionally well, with their return on investment all coming in higher than 25%. A few of these stocks have dividends in addition to their returns, but for the sake of my rankings, they were not added in. We are focused solely on the growth this time around, so without any further ado, let's get growing. Starting off our list is a stock people have been talking about thanks to food shortages as a result of the war in Ukraine. That is Nutrien Ltd with a ticker of NTR. Based out of Saskatoon, Saskatchewan, Nutrien is the largest producer of potash and the 3rd largest producer of fertilizer. In other words, they make food grow, and that may not be the only thing growing as they are on this list. They have a market cap of $60.94 billion and a very stable beta of 0.90. Their earnings per share come in at 17.01, and they have a price to earnings ratio of 6.65. Their debt to equity ratio comes in at a nice 43.97. Nutrien is one of the companies on today's list with dividends. They have a yield of 2.33%, which is paid out quarterly in the amount of 48 cents USD per share. Just a reminder, these USD dividends will have to go through a currency conversion on your broker. Let's look at their growth in 2022. They entered this year with a share price of $90.20, and at the time of recording, they are priced at $113.07. Not too shabby. That gives them a return on investment this year of 25.35%. As food shortages continue, Nutrien will continue to do well, and this is a company that I believe will still have solid returns on the other side of the war. Coming in next, we have a company we have seen before, and in fact, I not too long ago did a deep dive on them. Dollarama comes in at our 6th spot, and they have a ticker of DOL. Based out of Montreal, Dollarama is usually the first name Canadians think of when they are thinking of dollar stores. With money tighter than ever, Dollarama is becoming the destination for thrifty buyers. They have a market cap of $23.04 billion and a super stable beta of 0.78. Their earnings per share come in at 2.50, and they have a price to earnings ratio of 31.98. Dollarama is also one of the companies on today's list with dividends. They have a yield of 0.277%, which is paid out quarterly in the amount of 5.5 cents per share. So let's look at their growth in 2022. They entered this year with a share price of $63.03, and at the time of recording, they are priced at $79.96. That gives them a return on investment this year of 26.86%. Heading into a recession can only be good news for Dollarama, as more and more people have less money to spend. Those thrifty shoppers will be plentiful. Coming in at number 5, we have a brand new stock to the channel. Sprott Physical Uranium Trust has a ticker of U.UN. They are based out of Toronto, and they are an investment company that invests in uranium-based assets. With an energy shortage and nuclear power coming back in favor, the demand for uranium is totally radioactive. They have a market cap of $4.11 billion. As a managed closed-end trust, we do not have the normal stats for this company. However, they do come with a management fee of 0.35%, and their managed expense ratio comes in a little higher at 0.96%. Sprott does not have any dividends. So let's look at their growth in 2022. They entered this year with a share price of $13.86, and at the time of recording, they are priced at $28.43. That gives them a return of investment this year of 28.43%. The demand for uranium is growing. As a result, I suspect the share price will follow suit. Sticking to the mineral stocks, we have Allkem Limited at number 4, and they have a ticker of AKE. This is an Australian company with a home on the TSX. They are an industrial, chemical, and mineral exploration company. One of their key goals is to develop sustainable lithium products. They have a market cap of $8.37 billion and a slightly more volatile beta of 1.65. Their earnings per share come in at 0.72, and they have a price to earnings ratio of 18.24. Their debt to equity ratio comes in at a very nice 11.73. Allkem does not currently have a dividend, so let's look at their growth in 2022. They entered this year with a share price of $9.98, and at the time of recording, they are priced at $13.13. That gives them a return of investment this year of 31.56%. That is not too shabby. Lithium-based products are in demand, and Allkem has committed to increase their production threefold by 2026, so they can maintain 10% of global lithium production. This bodes well for them as an investment. Coming in at number 3, we are moving into the financial sector. We have Definity Financial Corporation with a ticker of DFY. Based out of Waterloo, Ontario, they are a multi-channel property and casualty insurance company. They have commercial products that include auto, property, liability, and specialty insurance products. They have a market cap of $4.48 billion and no beta. Their earnings per share come in at 1.36, and they have a price to earnings ratio of 24.43. Their debt to equity ratio comes in at a mind-blowing 0.99%. Definity Financial is one of the companies on today's list with dividends. They have a yield of 1.29%, which is paid out quarterly in the amount of 12.5 cents per share. On to their growth in 2022. They entered this year with a share price of $28.94, and at the time of recording, they're priced at $33.62. This gives them a return on investment of 33.62%. Insurance is something that is never going away, so does that mean Definity Financial has it made? Their amount of debt sure does imply they have what it takes to weather a recession. Someone had to just miss out on the top spot, and that someone is Elemental Fleet Management with a ticker of EFN. Based out of Toronto, they have 2 core segments to their business, which includes a global fleet management company and a commercial finance company. Their fleet services allow them to manage, while their finance side allows them to finance commercial vehicle and equipment fleets. I do like how these two sides work together like that. They have a market cap of $6.92 billion and a wee bit better than average beta of 0.92. Their earnings per share come in at 0.85, and they have a price to earnings ratio of 20.46. Their debt to equity ratio comes in at a holy banana bread 248.26%. That is much higher than I like to see for sure. Element Fleet is one of the companies on today's list with dividends. They have a yield of 1.78%, which is paid out quarterly in the amount of 7.7 cents per share. On to their growth in 2022. They entered this year with a share price of $12.96, and at the time of recording, they are priced at $34.18. That gives them a return of investment this year of 34.18%. Their debt is high, and that can always be concerning. For that reason alone, I would be cautious with this one. However, a higher level of debt may make more sense in a company of this nature. Still one to be cautious with, though. Our top spot is not just a fraction above the others. In fact, if you added the growth together of the first 3 companies on this list, this one still comes out on top. Turquoise Hill Resources has a ticker of TRQ. Based out of Montreal, they are a Canadian mineral exploration and development company. They hold a 66% interest in one of the world's largest copper, gold, silver mines located in Mongolia. They have a market cap of $7.83 billion and a beta of 1.62, so there is a little added volatility. Their earnings per share come in at 3.61, and they have a price to earnings ratio of 10.78. Their debt to equity ratio comes in at 42.83. They do not have dividends, but with the growth you're about to see, I'm pretty sure you can forgive them for that. On to their insane growth. In 2022, they entered this year with a share price of $20.56, and at the time of recording, they are they're priced at $38.93. Holy banana bread. That gives them a return on investment this year of 89.35%. Minerals are good business, and copper is definitely one to watch as the demand spikes up for its various uses in electronics and EVs. This is absolutely a stock I wish I discovered back in January. Even in 2021, it had an ROI of 31.39%, which is really not too shabby at all. These stocks are really good compared to the bear market, so they may be worth a little due diligence for sure. The fun does not have to end here, as you should check out my video on Dollarama that I have linked on the left, or you can check out the video YouTube thinks you will like on the right. Your click will decide who is right, and I will see you in the next video.